Today, we'll discuss recent developments in the tech industry, including updates from Google, Anthropic, and SPACEX. On May 19th, Google held its I.O. conference, and this was no ordinary keynote. The Gemini app now has 900 million monthly active users in 230 countries, up from 400 million 1 year ago. Daily queries have grown sevenfold, and Google is spending between $180 and $190 billion on AI this year alone. The headline model is Gemini 3.5 Flash, which shipped the same day it was announced and immediately became the default across the Gemini app and Google Search worldwide, 4 times faster than competing frontier models, less than half the cost. And it outperforms their own previous Pro model on coding and agentic benchmarks. But the product that really changed the conversation is Gemini Spark. This is Google's 24/7 personal AI agent running on dedicated cloud virtual machines, meaning it keeps working on your tasks even when your device is off. Gmail, Docs, Sheets, Chrome, all connected. Long horizon, autonomous task execution. They also launched Gemini Omni for video generation, a new $100/month AI Ultra plan, and Ask YouTube, a conversational video search feature live today for premium users. Google has a distribution advantage no other AI company can match. This week, they finally showed they know how to use it. A technology company anticipates reaching its first profitable quarter by mid-2026. Estimated revenue is around $10.9 billion. That's more than double the $4.8 billion it posted in Q1. $1.8 billion, 8% growth in a single quarter. An expected operating income, $559 million. The WSJ noted this growth pace outstrips Google, Facebook, and Zoom at comparable stages. What's driving it? Over 300,000 businesses now use Claude, and Claude Code has already hit close to $1 billion in annualized revenue on its own. These numbers were shared as part of an ongoing funding round that could push the company's valuation above OpenAI's. Reports place exploratory IPO conversations with Goldman Sachs, JP Morgan, and Morgan Stanley already underway. And in the same week, OpenAI is reportedly preparing to file its own IPO prospectus confidentially, possibly as soon as Friday. 5 years ago, these were 2 AI safety research labs. Today, they're racing each other to Wall Street. When analyzing mega-cap technology conglomerates, understanding how vastly different business units balance each other out is essential. A prime example is looking at a company like SPACEX through the lens of a public market structure with a multi-trillion-dollar valuation framework. In this model, we see 3 entirely distinct businesses operating under a single corporate umbrella. First, there is the mature satellite internet division, acting as a massive cash engine by generating over $1 billion in quarterly operating profit from more than 10 million global subscribers. This highly profitable segment directly funds the capital-intensive divisions. For instance, the heavy rocket development side can absorb hundreds of millions in research and development losses, while the artificial intelligence division can run massive multi-billion-dollar quarterly deficits to fund infrastructure spending that scales up to $30 billion annually. A critical element in these tech ecosystems is infrastructure monetization. This includes major enterprise partnerships, such as a hypothetical $1.25 billion per month data center access agreement with an AI lab like Anthropic for exclusive compute power. Furthermore, corporate governance in these massive structures is frequently maintained through dual-class share systems, allowing a founder to retain over 85% of the voting power without selling down equity. Ultimately, this represents a unique corporate playbook. By weaving together consumer satellite internet, heavy aerospace infrastructure, and advanced AI compute into a single, inseparable entity, the business creates an entirely new model for modern tech conglomerates. When we look at the broader landscape, the rapid scaling of advanced AI ecosystems is reshaping the entire technology sector. We are seeing major tech ecosystems deploy their most powerful models to date, AI labs like Anthropic reaching massive milestones like $10.9 billion in revenue alongside their first profitable quarters, and massive aerospace infrastructure models positioning AI compute right at the center of their long-term value strategy. Looking at these shifts, which of these strategic moves do you think will have the greatest long-term impact on the industry? Share your thoughts in the comments below. I look forward to reading your insights. If you found this structural breakdown helpful, please hit like and subscribe. We will be back soon to analyze more high-level shifts across the tech industry. See you next time.